Hi, this is Palmer coming to you with another forecast from optionspreadtrades.com. We are looking at the November trading record. Last week, we took a straddle on Dell. We closed a straddle on Dell on Friday the 21st. We opened it the week before on the 12th. We entered at 295 and we exited it at 340 for a per contract profit of $45. We took two contracts based off of a $10,000 account. So that gives us not quite 1% return on our account. We also closed off a trade on the 18th. We entered at $1.25. This was a spread, a bear call spread on JP Morgan. We took a credit of $1.25 per contract. We exited when the spread was at 15 cents. So per contract, we took $110 profit. So two contracts, $220, another 2.2% based off of a $10,000 account. We also entered into a couple of short trades. We bought a put, a February 2009 put on Home Depot. We entered at $1.50. We entered that on Thursday. And Bank of New York Mellon, March $15 put. We entered that at $1.75. It's currently at $2, and we also entered that on the 20th. Okay, just as far as these two trades go, HD and BK, do expect a little bit of bumpiness this week. These are puts, and we expect some bullishness this week. What are we basing our bullishness off of? Well, a couple of things. Okay, first of all, well, we're looking again at the weekly chart of the S&P. We got a sell signal back on September 4th at 12.52. The markets are currently now trading at 791. Been a huge drop, quite a roller coaster ride. There hasn't been a whole lot of upside to this market. We did get a big pop on Friday after Obama announced his cabinet nominations, but mostly it's been, big move ups, big move down, but mostly big moves down. Okay. Again, the stochastics are oversold. They've been oversold for some time. It hasn't really meant a whole lot because the markets have been in free fall, so the stochastics, a lot of technical indicators just are not working very well. We are sort of oversold, getting oversold on the daily chart as well. But also, the reason we believe that there's probably going to be some bullishness this week is that we are coming into a bullish period with the seasonals. Monday, Tuesday, Wednesday are typically up over on the S&P, up over 62% of the time. But also we have a holiday effect coming from Thanksgiving. There tends to be a bullish effect on stocks the few days, 2 to 3 days preceding big holidays like Christmas, July 4th, and of course Thanksgiving. So hopefully we'll get a little bit of bullishness so we can get in on the short side with very low risk. Okay, what we want is for the market to rally a little bit, and then we'll enter on the short side. Okay. The other thing we want to take a look at, of course, is I'm sorry, I forgot one thing. For the markets to get a technical buy side, to get a technical buy signal on the weekly chart, we would need to supersede. We need to break through the 1008 level. Again, we're currently at 791. That's a rally of over 200 points. In this market, given the volatility of the moves, it is possible to hit that, this week, but it's probably kind of unlikely. So we'll wait and see. We never want to say never in this market. Okay. We're taking a look here at the commercials. Of course, since the commercials are continuing to sell the market, even if we did get a technical buy signal on the S&P, we're not going to want to be buyers of this market until we see a sustained buying pattern from the commercials. Okay, so we haven't seen that. We have seen a little bit of buying. 2 weeks ago, we saw some more buying last week, but it really isn't enough. I mean, overall, the commercials are net sellers, and we don't want to bet against these big players. Okay. So again, our account is up by about 3% for this month. Hopefully we'll close off a couple of these other trades and we can get it up maybe 5 to 10%, which we'd be perfectly happy with. They're not the big months that we've had in the last couple of months. Again, we had 17% in October, 20% in September, but given the volatility of the market, the back and forth nature, the C sign, we're pretty happy with sort of 5 to 10% when most other hedge funds and newsletters are sort of losing double digits. We here at OptionsSpreadTrades.com are doing pretty well because we are pretty conservative. We also like to use non-directional trading strategies, things like straddles, bear call spreads that help keep us safe. Okay, so we're going to continue doing that until we see some high probability directional trades. We'll continue with the straddles, maybe do some iron condor spreads, and continue with the bear call spreads. Okay, thanks a lot for watching. Thank you very much for listening, and we hope you have a very happy Thanksgiving with your family and happy trading. Take care.